Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. We got a great show lined up for you. I'm Harvey Freed. To the right of me, Harry Glanz.
Good morning, Harvey. Good morning, everybody out there. Love the intro music. Don't you like that, Harvey?
Oh, yeah. Keep us going here.
Let's go. Wake up, everybody. We got a great show for you, and we're going to talk about everything mortgages, real estate, what's going on with interest rates. Jerome Powell, Donald Trump, they seem to like each other a lot these days.
Yeah.
Yeah, right, sure. And what's Powell going to do with interest rates the rest of the year, Harvey?
We're definitely doing mortgage and real estate here on the sports station, of course. We're going to break the Tigers' jinx today. I just want to announce that.
Well, you're going, so therefore they're going to win the game today.
Break the jinx. The winning streak starts tonight. Guys,
doesn't matter if Scooble's pitching, but the bottom line is you're going, and you're going to break the streak.
The guy with the mustard on his shirt. Right, exactly.
That's it.
We got great guests lined up for you. Cody and Ty Brown. Hey, you guys. Thanks for joining us. Everyone knows you for sure, Cody. I follow you on Facebook quite a bit. Epic Realty, Impact Agents. Thanks for coming in. You guys made a little track to get here, too. Not too far.
No, not bad at all. Thank you so much for having us. We're excited to be here.
Actually,
it's going to be a lot of fun.
Sort of that idea is, too, you came from Grand Blanc, and the first thing I said is, how was your ride in? You're like, it's not that far, right? Our highways, and if you get up early enough, you can beat the traffic, the construction zones, and, probably took you 50 minutes here, but sort of how Metro Detroit's set up, that's why you're so busy all the time is you're up there in Grand Blanc area. That's your hometown, but you're doing everything. You're doing Oakland County. You've got Livingston to the west, and of course northern Macomb County. And then you even talked about West Branch. Tell me about what's going on in the market in all these different areas.
Yeah, well, we concentrate in Genesee County, probably Livingston, North Oakland County, but we do have this beautiful pocket in West Branch for all of our folks that go to northern Michigan. That's where we have a lake house, and so. I think we broke away the first year or so to just relax. And then all of a sudden everybody starts asking about real estate, right? Even if you're on vacation. So it's kind of the same in all of the places, though, honestly. It's still been really steady. It's been incredibly busy. Homes that are priced correctly, marketed correctly. We're getting multiple offers. We're getting over list price asking, So it's been an incredible market so far this year.
So everybody out there, you hear what's going on. The market is still hot. Okay, and you're getting these overpriced, above list. Tell us about the contingencies. Are people waiving inspections still? Are they coming in with a pass-fail inspection? I mean, talk about the appraisal contingencies or appraisal guarantees. Let's talk about that because it's important for people to understand what's going on in the market, and when you put in an offer, what they can expect or what you're telling them as their broker, what they need to do to go ahead and get that house.
That's a great question. It depends on the property, but I think bottom line, I have to say, listen to your agent. And the making sure that ahead of time you have your pre-approval is incredibly important, and that those contingencies that the agent's trying to communicate with the listing agent and say, okay, what are we looking at? How aggressive do we have to be? Because there are some you have to be incredibly aggressive. You have to have the appraisal gap guarantee where you're going over what the appraisal might come in and pay in cash. Some you may have to have a pass or fail inspection. Some you may have to say, oh gosh, I have to sell my home, but I've got to find out some creative financing so I don't have that contingency on there.
Yeah, the bridge loans have been really popular for some of the folks. And then other people are still doing it the old-fashioned way. They're like, look, I can do that reverse contingency. I can sell my house contingent upon me finding another one, which has been difficult for some families with the lack of inventory we had in the past. But definitely that inventory's picked up a little bit.
It has. I think we're really blessed here because I think ours has stayed steady. And I think, I don't claim to know all the answers, but I think because we didn't have some crazy boom of building back in the years like Florida and Arizona and Texas had, Michigan stayed really steady. I don't think that we're having the problems that they're having with oversaturation of listings. I think I just read yesterday they're actually taking more listings off the market in Phoenix than they're putting on a daily basis right now. So it's stayed incredibly consistent across the board.
Yeah, so what you're saying is you're seeing pockets of the United States that are going back into being a buyer's market, too much inventory.
Absolutely.
In certain areas, that's true. And even in certain areas of Florida, that's true. However, there are certain areas that it's still a seller's market. And that's why you have to hire people and get on a team that knows what that area is dictating. Because, look, every seller wants the most for their house, right? And every buyer wants to pay less for that house. So there's going to be that natural tug of war, right? But if you understand the market, the object is I've got to get into that house, and what do I have to do that's reasonable? And we talk about the word reasonable. Waiving an inspection, to me, and I've said this on the air for 25 years and 35 years in the industry, waiving an inspection is not reasonable. Anybody that asks you, to me, to waive an inspection, it's not reasonable. But there is something now that's called, let's go over it, a pass-fail inspection. Go ahead.
Yeah. Well, we have to agree with you because we do not recommend that you waive inspections whatsoever. We actually sit down with our clientele and say, if, we've had clients bring it up to us and we'll say, if you're going to do that, you're going to sign a waiver with us. And so Ty's made up those addendums so that we make sure that we're covering our clients' best interests as well as ours. Now, pass fail means at least they get the right to look at the home and decide, hey, I'm not going to ask for anything. I'm not going to nickel and dime you for, a plug-in or some chipping paint or whatever it might be. But then I do have the right to still walk away. Depending on the property, depending on how aggressive the offers may be or multiples, that still may be an option for folks. I have seen some, though, where they say, gosh, the other one didn't ask for an inspection at all. So the clients are taking that one. On the list side, we're listing heavy. We always tell our clients the inspection should have no bearing on whether you accept an offer. You really should have one. It protects you too. It protects liability.
It really does.
Absolutely does. And we say that to people. Wouldn't you want to know that if you're listing a house, what's going on in your house when you have somebody in there? Now, when you have an inspection, everybody, it doesn't guarantee. It really doesn't guarantee anything. It's just an eye-opening thing. And why would you invest $200,000, $300,000, $400,000, $500,000 in a house without paying $500, $600 for an inspection just for that kind of insurance policy? Now, real life situation, I had a situation, I'm not going to tell you where, I'm not going to tell you the community, I'm not going to tell you the people involved, is where an inspector missed asbestos in an attic, okay?
Okay.
And it needed to get an abatement.
You don't want to breathe that stuff in? Yeah, you've got to fix it.
And they missed it. The seller, because the seller never occupied the house, they didn't have to go ahead and do what? They didn't have to disclose anything. So we ran into a situation where the buyer got hung out to dry. That's my terminology for it, mortgage banker's terminology. They got hung out to dry for the cost of the abatement because A, it wasn't disclosed. B, the inspector missed it, and C, they had to do it. Now the good news is it was a small job. It was only
good.
It was only $10,000.
Oh boy,
it wasn't the
that's not
it wasn't the $30,000 to $40,000 whole house deal. But it's very, very important. Even if you get an inspection. Now, somebody's going to call up and they're going to say, hey, Harry, but I'm a licensed contractor and I build houses, and I would tell my people to go ahead and waive it and then I'll look at it, or my family's going to use me. Listen, that's up to you. And we said it right there. You're going to sign a waiver that says, I said no way to an inspection, but we do not recommend that.
I like that idea of having a waiver, and it brings up the conversation again. That's always the important thing. I think everyone out there should know that there's some contract in front of you, and no one's really reading them. Let's go there. You're really trusting the people that are presenting it to you to go over everything, but it brings up the conversation again. And I think the key is home inspections, a small cost for a peace of mind. And then we talk about sewer inspections, well, and septic inspections. And, of course, the cities and everybody wants to see what's going on. I was talking last night on the baseball field with a guy, and he goes, no, I work for DTE. And he said, our infrastructure is rough. I mean, let's face it, folks. We got 4 seasons here, and Michigan's an older state. And our infrastructure is very old. So we're going to have those ice problems come this winter. There's going to be water mains breaking and things at your own personal house that you can maybe do to protect yourself. Again, a small amount of money for a really good peace of mind. And I just think you want to know, and like you said, it sort of takes the seller off the hook too.
I totally agree. And somebody said something to me most recently that I've been sharing with every person I can run into. We had a general inspection, and I feel like a great inspector, respectfully, is a jack of all trades and a master of none. And they'll tell you that. They'll say, hey, you know what? The roof, get it checked out by an expert. The HVAC, get it checked out by an expert, right? They'll put a doubt in your mind to have that next level of inspection done. And so we had that on a basement recently, and we brought out foundation folks, and the guy just passively says to me, he goes, in Michigan, everybody acts like a basement is set it and forget it, but we need to start treating them like roofs. He said a roof takes maintenance. Mm-hmm. It takes checking in. It takes some kind of big investment, usually about every 15 to 20 years. He goes, a basement's no different. And I was like, I had never heard that in all the years we've been in business, and it just blew my mind.
Well, do you know anybody in the state of Michigan with the weather changes and everything that we have that hasn't had some kind of water in their basement. There's going to be water in people's basements, and it's how you deal with it. And a lot of times it's just the drainage away from the foundation. All right, there isn't a crack, there isn't anything that's a major problem. It's just that you have to grade away from the foundation, and you see that all the time. And that's a great point to bring up. So anytime somebody says, well, I've never had water in my basement, you know they're not really telling the truth, because they've had water in the basement.
You're not cooking a rib roast here. It's not set it and forget it. I think you brought that up last
week. I like
week.
set it and forget it.
I
might use that one.
Last week we had these home maintenance guys on here, and it was a brilliant show. It just was, and it opened my eyes to, home ownership, you got to put 1% away each year, and they brought it up again for maintenance. And again, it's the roof, it's the HVAC. And we have that issue even in my home. We have an older furnace. Every day I'm like, is that air conditioner still working? Because we're going to have to replace it really soon. And again, a furnace in a heating system, a furnace in the AC, probably $6,000-$7,000 in most situations. So money can cure a lot of things, but definitely have a peace of mind so you can budget properly. Okay, we're going to take your calls here this morning. Cody and Ty Brown join us here from Impact Agents, Epic Realty. We're up against our first break, 811. If you're just joining us, it's the Hardcore Mortgage Real Estate and Business Show. We'll take your calls, 248-539-9797. We'll be back. All righty, welcome back to the show. It's the Hardcore Mortgage Real Estate Business Show, our 25th year. Yeah, we love bringing it to you. Mortgages and real estate. Buy that house, it goes up in value. You completely change your life. You meet some of your best friends by owning a house. I've really met a lot of great friends. Anyways, Cody Brown and Ty Brown are joining us here this morning. We always give you 1 hour of mortgage real estate talk. Harry Glanz to my right still. I'm Harvey Freed. And really cool thing, Cody, is everyone who goes up north, and you guys are all driving in your cars now. I've never gone up north or been with people that didn't say, I'm buying a place up here. They have zero interest in it. They get invited. They're up there in Boyne. They're in West Branch and Traverse City. And the first thing out of their mouth after day one is, I've got to have a place up here. So it's still rocking up there. Tell me about the prices. Has there been a big bump since the pandemic?
I mean, things have skyrocketed for sure.
Okay.
Truth be told, I went to my husband years ago, though, when we bought a new house, and I said, we either put an in-ground pool in or we get a place up north. And he goes, okay, let's put a pool in. So as soon as the pool was in, then we went up north, and I'm like, okay, we're also going to buy a place on the lake.
So it was a win-win. You got everything you wanted. Right.
We
I
got
said
both.
that super fast, by the way.
Yeah, you did.
Yeah, you did.
And also about West Branch, I was going to tell you guys that we went up there. We were just vacationing, and we were like, well, okay, we're not going to really work here. Word got out, and then next thing you know, we have 3 or 4 listings. So
Right.
Don't you
That's a
love
good
that?
thing.
Well, listen, in Michigan, we live for up north. We do.
Mm-hmm.
It's spring, summer, winter, fall, everything up there. Hunting in the wintertime, summertime's days like today, the weekends. Everything that you could experience in the 4 seasons we have here, and that's why the state is so attractive. And when you go up north, that's what it is. It's up north, and you love it there, and the lakes there, the boating, everything, the fishing, the golf. We have tremendous amount of world-class golf courses up north. So on both sides of I-75, the East Coast and now, West.
Right.
But, we want to talk about what's going to happen in the future. And we think about that all the time. Real estate is the best long-term investment people make, but it is a long-term play. It's not short-term. It is a long-term play. Nobody I know, like if you talk to your parents that bought houses in the 60s and sold them in the 80s, they made money. People that bought houses in the 80s, sold them in the 90s and 2000s, they made money. People that bought houses before 2005 and then sold them after, they made money. Now, again, somebody's going to call me and say, Harry, you're wrong. I bought a house in 2005 and sold it in 2009. Well, yeah, you sold in the middle of the recession. I mean, I can't help that. But if you take a look at a graph, and we have them all, and I can send them to you, for the last 50, 60, 70 years, real estate is the investment that's gone up. Anybody will tell you that. So let's just talk about what's going to happen. We're not talking about 30 years from now. Let's talk about what's going to happen in the fall and in the winter. Where do you think that the market is going to go? We've come off a great spring, a very nice summer. What is the trend looking to you in your market area for fall and then going into the winter?
Yeah, I mean, I personally still see it being strong. And when we talk about, just as a blip, those up north properties, I think those are always going to stay strong, right? They don't make more lakefront. So that's a no-brainer. I have so many people come and say, should we buy that second property? It's like, when should we buy it? Like, stop trying to time the market. Buy it when you want
How about
one.
now?
Right.
How
now is
when
good.
you can afford it, right?
Exactly.
Yeah. Mm-hmm.
As far as like primary residents, so in the markets that we're in here in southeastern Michigan, I still see a strong market. I think the interesting thing is we talk so much about the rate, and I get it. It's not, we're not at 3%, 2%, whatever. Where I don't personally ever going to see that again.
Never. It's not going to happen.
But I do think that people fail to realize, okay, great. Even if you have a 7% or an 8% mortgage, the average person isn't staying in that mortgage 30 years. We act like it's like a life sentence. Oh my gosh, I can't take that on for the next 30 years. People aren't staying in those mortgages anyways.
No.
So why are we so, like, if you can afford the payment now, if you can afford the house now, then buy the house. Who cares what the rate is? And it's funny, I will have a simplest answer when people say, well, when should I buy a house? Well, when do you want a new house? Well, I want a new house now. Well, why do you want it? Well, I've outgrown this one. Whatever your reasons are, that's when you buy a house. And then people go, when should I sell a house? Well, when you don't want this one anymore, that's when you sell a house,
pretty easy.
right? Like that doesn't change. And I know you had brought up like recession and buying and selling houses. When you look at those graphs, a lot of people still made tremendous amounts of money. Just because there is a recession, regardless of whatever, the mass media might be telling you, that doesn't mean real estate's going down. That's the problem. People assume we're going into a recession and now it's going to look like 2006 or 2008 and every third house is going to be for sale. That's not the case. You look at the history of recessions, a majority of real estate still continued to go up.
Well, and people bought during that period
Absolutely.
of time, and they sold, and that's where people make their money and they make their fortunes. And I'll tell you this, that I do believe this, that it's the fundamentals stay the same regardless of anything. It's when you can afford it, when it's best for you and your family. It's not a pair of pants. You don't grow into it. You go ahead and you set your foundation down to when you can afford it, and then you go ahead and you make the move. But it has to be right for you. You do the math. We talk about it all the time, Harvey. You have to do the math. You have to sit down with somebody and you do the math, and what fits your budget or your income or your long-term goals. You put all those down on paper, and then we'll do the math with you, and you'll make the decision. So, yes, the most popular program out there by far and away is a 30-year fixed. And I'm a big proponent and advocate of fixed-rate mortgages. Now, there are certain adjustable rate mortgages that might work for you short-term. An adjustable rate mortgage is a short-term play. You have to be a little bit more sophisticated, understanding what's going to happen, when it's going to go up, what could change, all those things. So there are so many programs out there, but you have to have one that's tailor-made for you and your specific thing. So mortgage rates, where are they going? Talk about this, Harvey. We know that that Jerome Powell and Donald Trump are going back and forth on it. And I believe that this year, we're going to see a rate cut. We might even get into this year. I believe we're going to have one for sure.
All right, that's closely monitored. That's for sure. National Association of Realtors they got their eye on this one for sure. The housing market continues to have some affordability issues. I don't think Michigan's one of those states, though. We're definitely very affordable here. Of course, if these rates drop, that should bring out even more buyers. But I'm just having a good week. I've run into some really smart young adults, college educated. You don't have to be lucky. You can be a trades guy. But these guys, they know what they're doing, and they're sick of renting. And a lot of the landlords have pushed those type of tenants, good people. They pay. They always make sure that they're paying their monthly rent. But the rents have gone through the roof. So definitely an opportunity moving forward here.
But Cody, if rates go down, won't that bring out more competition? More people will be coming on the market. Why don't people realize that right now, if it's steady, right? If it's steady, you should go out and at least look at what you're doing, because if rates come down, then more people are going to try to sell their house and more people are going to try to buy a house. So you should try to get in the game right now. It doesn't mean you buy right now. It means just start the process right now.
I totally agree. I mean, like you said earlier, the fundamentals don't change. I think that even year to year, when people are talking to us, we'll usually get a call after somebody has spent the holiday with their family, right? And they know that this is like, I have outgrown this house, or we're downsizing. They've spent Thanksgiving, Christmas. We're getting the call shortly after that. This is it, right? They say, we want to sell this spring. I'm like, no, you don't. You want to sell in like February. Like you want to sell, you want to be listed soon, right? Like let's spend January getting everything decluttered, and then get you on the market. And then buyers, same thing. They'll go, well, we want to buy when school is out, so it's easy. And I'm like, you know what's easier? If we start looking in January, because now you don't have the same amount of competition. The fundamentals are the same annually as well. You're right. I mean, as an example, we have a pretty large listing actually down on St. Clair, and they were contingent on another house, right? And the house went up on the market. The agent tells us, hey, it's going to be no big deal. It's going to be the only one on the market, and it's going to be priced well. Well, by the time they get on the market, there's 6 other houses. And guess what? All 6 of those have gone under contract before this house has. And it's priced well. It really is.
So what's the problem with it?
You've got things that are demand, like a first floor primary. You've got things like, it's more upgraded, So you can wait around, and it's a death sentence, because now if your competition comes out, and although you're priced correctly, somebody might have, more upgrades or more,
better
space.
location. Just
so let me ask you
better
this.
location.
So without getting controversial, and I just met you, is it really priced right if it didn't sell?
That's true. Well, I will say it was priced right when they went on the market. You're correct, because I say that all the time too. I go, we're going to take it to market, but I can't outmarket a poorly priced house. So we have to make sure that we're adjusting accordingly. And they did. They just recently did a price improvement, but they would have been probably able to get that price had that competition not come out, right? But when you drag your feet, sometimes you lose your opportunity to get that price. So now you've got all this competition.
Do you hear what Cody said? Do you hear what she said? A price improvement. She didn't say price cut. She said price improvement.
It improved for everybody.
That's right. So that's the positive way to do it instead of the negative way. Price improvement, Harvey?
Price improvement's a good one. Where are they moving? Okay, where are these sellers moving to? And again, I know you have different age groups and everything. What are they doing? Where are they moving to?
Well, we see a couple different trends. We see generational moving. We see a lot of that happening, where we have older folks moving in with their adult children and grandchildren. Ranches are still crazy. Yeah. Oh, my gosh.
So for 35 years, Harvey's been saying ranches.
The ranch.
Oh, my gosh.
He's been saying that forever, which, by the way, I have to give him on that. He said
I
a
like
long
pools
time
too.
ago.
Just two
You
things.
did
I
that.
like ranches and pools.
You do.
Especially when it's 90 degrees
This is
outside.
what Harvey said a long time ago. He said, no, Harry, colonials aren't the way to go. And I would always argue with him. No, everybody wants a 2-story house. Don't you understand that? And he said, no, ranches. And by the way, they want pools. I said, no, they don't. They don't want pools, bro. But that's the way it's going. So it's funny that you looked at me when you said generational moving.
Yeah.
Parents are moving in with their kids.
Yeah.
That ain't happening.
Yeah, not for you.
I'm not doing it. I've got a first floor master primary. I'm not doing it. Not going to happen.
Well, sometimes that triple whammy out there where the rates were a little bit higher and then the very few houses on the marketplace, the inventory was tight. Yeah, it was an uphill battle for a lot of folks, but that has changed. And like, there's enough inventory now where you need to get in the car, be a strongly approved buyer, have a lot of knowledge behind you. I think, again, what's been exciting for me is I felt like a lot of the younger generation, they're clicking buttons. When I'm talking to them out in the streets, they don't know anything. They're missing out on really have a deep conversation with a good lender. And there's a lot of great lenders here in Michigan. You definitely don't want to click a button and talk to someone in Arkansas when you're buying here in Michigan. And how important it is, Cody, to have that local lender? Because I'm calling the listing agents. Every one of my offers, I call the listing agent. Hey, let me give you the heads up on. And I have no problem going over the details. Here's the credit score. We have verified funds to close. Tell your sellers to enjoy the next 30 days. We're going to get this house closed for you. And that's what people want to hear. They want to make the most amount of money, and they also want a smooth process.
I mean, what you just said is incredibly important. I don't know how many times there's been where we've been on the buy side and they'll say, is it a local lender, right? They don't want a cloud base. They don't want, I think the hardest part, and it's not to talk poorly because I think everybody can be a good lender. However, there's so many hands in the cookie jar at some places where it's online. Sometimes people don't understand the difference between a pre-approval and a pre-qualification as well. And so they will submit those and think, oh, well, gosh, I just entered some fake numbers of what I thought I was going to make this year with overtime and bonuses. And, oh, wait, now I'm approved for $100,000 less. So it is what you guys do is critical to reach out to the listing agent. We've definitely gotten deals accepted because of that, because of that call. They said, gosh, I know I can get a hold of them. I know that I can contact this person.
Well, you want a singular point of contact. And we're going to the break, but a singular point of contact, no matter what business you call, you want to talk to the one person that can get it done for you, Harvey. Take us to break.
All right. Hey, Cody and Ty Brown, they're going to be joining us back here right after a couple commercials here. Keep it on 97.1 The Ticket. We'll take your calls, 248-539-9797. We'll be right back. All righty, welcome back. 8:30 if you're just joining us. The Hardcore Mortgage Real Estate Business Show. Always having fun here talking mortgages and real estate. Cody and Ty Brown. You know these guys. They're big-time players here all across Southeast Michigan and including all around the state now in West Branch and stuff. And, of course, you know, Cody, I always follow you and stuff, and you put something out there. It's really personal. You're like, you know, we were thinking about buying the up north place. Oh, no, you told me, Harvey, we're going to buy the boat, you know, and you put that off, and you actually bought a 2-unit rental first, and you used the DSCR loans. These have become very popular. Ty's like, don't even go there. But hey, look, you're obviously a professional real estate agent, but you realize that, look, we need some income. We need some residual income coming in. And this is good cash flow. And you bought a 2-unit. Where is that 2-unit?
So it's in Burton. It's just north of Grand Blanc.
Yeah, we know Burton, Michigan.
Yeah. It's it came on the, it's a funny story. It came on the market. And the minute it hit, I have a search set up. I recommend this to everybody.
For 2 units, you wanted a 2-unit.
I wanted to look at multifamily.
Okay.
You know, there's pros and cons to both, right? Like multifamily, sometimes like it feels like somewhat of less risk. At the same time, it can be more expense because you have. But I was looking for really something specific, something that had renters in it already. And I had a search set up. Highly recommend that for anybody that's looking for primary or secondary. Just set yourself up a search; it'll come
buttons,
to you.
Right,
Yeah.
you set up the search with a portal.
Let it
through
come
a
to
qualified agent. Yeah.
And when it came up that morning, we were actually up north, and I called the agent. I think Ty was doing something else, and I'm like, "We're gonna write an offer on this." I didn't even tell Ty. And it had a 20-year renter in it, though, and an 8-year renter. The last owner had bought the property with the tenant in it, and they were good tenants, paid on time all the time. The one tenant like takes care of the property. It is, you know, it's not a basement. It is basically a set it and forget it. So it's been wonderful, but we did use a DSCR. That was what I was sharing with you. I asked if you guys, you know, how many of them are you seeing now a year later after we've bought ours? Because it was a wonderful product to buy an investment property with. Like you said, you can explain it better than I did, but the process for us was the best lending process we've ever been through. It was so
we
simple.
have all these weird things. DSCR, debt service ratio. I had it in my head right now. Completion debt service ratio. What letter am I missing here?
Yes. No, debt service ratio, Harvey.
Coverage ratio. That's right. Debt service coverage ratio. Okay, again, so basically it works like this, folks. You got good credit, minimum usually 15% down. I have seen some 10% down programs, and a lot of families just want to go 20% down. If the rentals in the community or that house or the 4 units are more than what your mortgage payment's going to be, and you've got good credit in the down payment, you can become a landlord really quickly. It's a great program. More and more popular program out there and stuff. Again, it's not for everybody. And I like how you threw it out there. Like a 4-unit multifamily could come with a lot more cost. That means when the furnace that are 30 years old, you might need to replace 2 of them now or 3 of them. Did you get a 2-unit or a 4-unit? What was it?
It's a 2-unit.
Okay.
And you know, the thing I thought too is, you know, we've helped so many people invest. This is the other thing that's wild to me is a lot of realtors, we don't get high off our own supply. We don't go out and buy real estate. I don't understand why. So we're trying really hard to push ourselves.
She throws out the
Scarface.
She throws out the Scarface reference and expects it to go over my head.
I'm just happy I remember debt service cover ratio. I'm still thinking in my head right now.
You don't get higher your own supply. Wow.
Right. Why don't more agents? Right. Well, they do. They definitely do.
I think that it's scary for a lot of folks, you know, to go past a primary. And I mean, we even try to educate our clients. For somebody that's saying, you know, my very first, I had 2 listing appointments yesterday. My very first question when they said, we want to sell this house and buy another house. And I go, is there any world where you keep this house? Right.
Well, we all know that there are times that you should have kept that house. But
100%.
But again, it's not for everybody. And if you're educating people on the perils and pitfalls along with the pros that you can get out of being a landlord. And when I say being a landlord, it's tough being a landlord. It's not easy. There are repairs or things. You might get a call in the middle of the night, something went out. But the bottom line is that there could be, like I should have kept my first house. And I've been in my existing house for 34 years. And I always look back and say, I wish I would have kept the house, Harvey. How many lake houses have you had?
2.
Yes. Should you have kept the first one?
Everyone always wants to keep their old house, but they need that. They got to free up the equity to put the down payment down and stuff. And again, it's not for everybody. Not everyone wants to be a landlord.
No, I totally agree. I don't think everybody wants to be a landlord. I do think more folks would take advantage of pulling equity out of homes if they were educated, though. And I think if they were given that option. And so we just like to at least take a pause and ask people. And sometimes they're like, no, absolutely not. And some people are like, I don't even know what that looks like.
Right.
And so at least we're giving them the opportunity to educate them. Circling back to what we said earlier, I think that's when we were talking about, ranches and everything else. One thing that I think is happening in the market that I really do love seeing is that I see more people that are entering the market buying a house that they can afford instead of trying to buy the house. We had this era where I feel like kids could finally, they got out of college, they got their jobs, and they wanted to buy the house that their parents had after a 30-year career. And now we have people just going, no, I'm just going to buy a house so that I can at least have a home and then let it build equity. And then I can buy that next house. I think people are actually understanding, like, don't wait around for the perfect house. Just buy a home,
and stop renting.
Well, it's got to check X amount of boxes, right? It might not check 10 out of 10, but if it checks 7 or 8, then you're good. And again, if you can go ahead and stay there for a little bit and then build that equity, and then you can do that, move to the step up home. Absolutely. So I think that's always been a plan for people. But what we're seeing right now, the problem is housing affordability, and it's in the papers almost every single day. Housing affordability is pretty rough right now. And you're seeing people, their starter homes are $500,000, $600,000, $700,000. And how are your kids, and you have kids 10, 12, and 14, you're looking at it, your 14-year-old, in 10 to 12 years, she's going to be looking at buying a house. What are prices going to be then?
Yeah.
But listen, everything has its way of evening itself out. Our parents probably couldn't afford the house they were in, they made it. Now here you are 30 years later, 40 years later, and look at the price of homes. That's why we say real estate is a very long-term play.
Cody, let's go off to one of your listings out there. And I always like to talk about some fun stuff out there. And it's fun if you're thinking about buying a place up north. You've got a great listing up in the West Branch area. And tell me about that house.
Yeah. So we have a listing that's on open water right now. It's got about 100 feet of frontage. I say the potential is endless. It's a family that's owned it. They built it. So it's been one owner. It's built at really kind of a point in our lake where even though it has a seawall, it is a sandy front out there. But it's a ranch, which we all love. And then it has a walkout basement to it that is a blank canvas. You could go in there and finish it pretty easily. It's an absolutely beautiful home, listed at $400,000. So you talk about starter homes being $500,000.
How many square feet?
It's about 1,700 square feet.
Okay, it does not include the lower level walkout. No.
I think it does include the lower level. Yeah, it's a smaller cabin. It's absolutely beautiful, though.
So it's a 1,000 square foot up top, 1,000 square foot ranch with a walkout basement. Yep. Again, you don't get taxed on that part, folks. Again, anything underground, we always go there with the appraisal stuff. Yep. Anything underground, 1% of that basement or walkout or crawl space or daylight windows is underground. It's living space. Yeah, if you're living down there, it's living space, but it's not counted in the square footage. You don't get taxed on it. Like you said, it's an open canvas. If they never finished it, wow, those people just deck those out and they put their kitchens down there and everything. So good stuff. Hey, let's roll off here. We got a call. Steve, you're calling in. Go ahead with your question, sir.
So my wife has a illness that kind of caused us to look at moving ahead with life quicker than we had originally planned. Long story short, we don't have a lot of cash in accounts, but we have probably about $250,000 equity in our current home that we live in, and started kind of looking at just the two of us using the equity that we have to put as a down payment as an up north house, like you kind of been talking about up north houses, and wondered what kind of mistake that was to do something like that, not necessarily just for now, but assuming that I'm going to be around much longer than her. I don't mind having to deal with that after the fact, but I want to make sure I'm able to live on top of that too. And I know I could always end up selling that if I wanted to at some point. Wondered your advice on that in terms of using the equity in your house that you currently have to invest in other properties.
Yeah, I think that's wonderful.
Yeah.
I think that's one of the processes that you go through, is that when you have a house, you look for another house, you take the equity out of your house and you go from there. So I think what you have to do first is identify a property that you want to take a look at. We can always take a look at getting a pre-approval, but you're going to want to go ahead and plan on taking a look at a property up north that you can afford. We'll do the math for you. We'll contact you. We'll run all the numbers for you, and then you'll make that decision. And we'll obviously count every single payment and debt that you have to make sure that you can go ahead and you can afford it, because it's going to be about affordability for you.
Yeah, I mean, that's a couple choices. Cody, you want to jump in on that?
Totally agree. And Steve, I'm sorry to hear about your wife, but what you're looking at is exactly how we bought our first place up there. We pulled the equity actually out of our home with a home equity line of credit. And we didn't want to touch the cash reserves that we had because we knew there'd be opportunity in the market to buy other things like the duplex and other investment properties. And so we pulled a home equity line of credit and then, go to you guys and find out what's our affordability on this. I think a home equity is a great thing to have on your home regardless. So, and then we did that mortgage. So our actual down payment at the time came from our home equity and then the mortgage was on there. So it is doable, but you do have to make sure that you're making wise decisions that afterwards you're able to pay off that home equity, what that looks like.
Yeah, if you're borrowing money to go ahead and buy an asset that's going to be an appreciating asset, that's the wisest thing to do. Mm-hmm. That's what most investors do, and they don't deplete their cash. Cash is king. You don't deplete it. You go ahead and borrow. Buy that asset, and that asset will go ahead and increase in value.
I'm going to throw one other thing in. We got our PLS program. If you're thinking about buying a second home, a vacation home, an investment property, call us at Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. We've got some special programs for you. Save money, and make sure you make that phone call. We're up against our last break of the day, 8:42. If you're just joining us, keep it here on 97.1 The Ticket, 248-539-9797. We'll be right back. We are back. That's right. I didn't talk to Paul Sura, but I think we got Pat Caputo coming in. Mark Ryan was working last night.
Where is Paul today? Oh, yeah, he's relegated to a different studio, so
yeah.
He's producing our show from another studio. Paul's the man.
All right. Anyways, we got tons. after the show, we're going to have sports all day long. Of course, I'm going to the Tiger game, so that's important because we're going to break the streak. 6:10 start.
We're winning tonight.
Dan Dickerson, probably Bobby with him, or Dan Petrie doing the call here on 97 won the ticket. Who knows? Maybe it's Andy for that matter. But hopefully they'll break it, this losing streak up. And again, we don't want just the win tonight. We got to get back to our winning ways. Say, we got this.
So Cody and I were talking at the break. It goes something like this, Harvey, and this is your biggest pet peeve, is that you call people on the phone. I know people have their phones in their hand all day long. Right, they're looking at it, they're scrolling, they're checking out Instagram. Right. They're looking at reels all day long.
Yeah,
and then you call them on the phone, and what happens, Cody?
They don't answer.
They don't answer their phone. How is that possible? Explain it to me. We're in business. How do you do business if you don't answer your phone?
I don't know, because we answer ours 24/7. I will even tell our clients, like, if I'm not answering it, I'm getting back to you. So, like, call me anyway. I don't care if it's 2 o'clock in the morning. I will never understand it. It's probably one of the biggest agent-to-agent complaints is that we can't get a hold of the other agent. And you know what really stinks is that you can't turn around then and tell, like, their client, hey, I'm trying to call about your house.
Yeah, knock. Who's there at the door?
Agent
I've been trying
Harvey,
to call your real estate
agent on agent crime here.
Right.
Don't get high on your own supply.
Yeah.
Agent on agent crime here.
Industries, waiters are like, that restaurant sucks, and it's always out there.
Here, how about this? You could be texting somebody all day long or intraday and whatever, and then you decide, you know what, I don't want to text anymore. And you pick up the phone, you call them, and they don't answer.
Yeah.
How is that? You just text me.
Yeah.
Okay, answer your phone. What's up with that?
All right, we touched on some really cool things this morning. We started off the show really with that home maintenance thing, and I like that as we sort of circled back from last week's show and talked about, putting some money away. 1% is suggested. If it's a $200,000 or $300,000 house that you own, put away $2,000-$3,000. You might need a new furnace. You might need a water softener. Save money for that roof that's coming up, whatever it is. And we're going to go to some other things here, but we got a call to get to. So let's go out to Tim. He's looking to buy a second house. Good morning, Tim. Welcome to the show.
Hey, folks. How you doing this morning?
Morning,
good.
Thank you.
I'll say, Tim, that you are calling from Grand Blanc. If this is a setup call, we're going to know
Right?
afterwards. Go ahead, Tim. What do you got?
No, I don't know what that means, but no, it is not.
Okay. These guys happen to be from Grand Blanc, but don't worry about it. It's all good.
Oh, okay. No, we're looking at a second home, but we're not sure if we want to buy it and move in or buy and do a rental. We're kind of debating on investment stuff at this point. And I'm just not sure if it's better to invest all the money and build, or if it's better to pay a little bit less and pour into upgrades, because most houses are going to need upgrades when you get them. So I just want your advice on that. And we're talking about paying cash, by the way.
Yeah. So I'm biased. I like to find the most ugly duckling on the entire lake and try to get it as cheap as possible, right? That's what we did when we bought our second home up on the lake. Is we found the property that had sat that nobody wanted to mess with because it needed a new roof, it needed a little bit of crawl space work, and then now here we are. We're only 3 years into it, and we're sitting on probably about $250,000 equity for putting in about $50,000.
Did you hear that?
Yeah. So I'm biased. I mean, if you are, when you mentioned, we don't know if we want to move into it or what we want to do. I highly encourage anytime you can find a place that does allow you abilities to rent, whether it's a medium term or a short term, because there is a lot of regulation coming down about, different terms of rentals. You have pockets off of some of the bigger lakes on Higgins and Houghton and even on Torch that won't allow you to. We've even had the same kind of go round on our own lake. And so I encourage you to look at that, because different lakes and different townships will have different regulations. Even if you don't plan on doing it, here's what's been the big kind of scuttlebutt on our lake is, even if you never plan on renting your own place as like a short-term rental, what happens if you get into a season of life where you're never using it? Right now all of a sudden the grandkids are busy and now I want to be by them. Or you get to a place where we're a lot older and now we're passing it on to our kids, and our kids don't want to sell the property because they've been there 20 some years building memories, but they're not going to be there all the time. So they want it to pay for itself. They want to be able to rent it maybe once a month. I think it's incredibly important to have options. If you don't want them, great, but you should at least know if you're able to.
So
go ahead, Tim.
A standpoint, is it? I mean, it seems like a lot of the builds, when you build them, you when you walk in the door, you're a little bit upside down. So I guess that's my concern. Is it better to just buy an older one and upgrade, and then you got equity immediately, or the builds seem very expensive now?
Well, that's a true statement. I would tell you this, that you got to look at all your options, but I would tell you that if you could find something and then add your own touches, rather than going ahead. I have another question. First question is, why do you want to put all your cash reserves down into a project? I would rather see you go ahead and save that cash and use that for the upgrades and keep some cash reserves. But that's up to you. I mean, anywhere you go,
That's what I'm debating.
Yes.
That's exactly what I'm debating.
Yeah, I would tell you, and we could talk about it more off the air, I would say to you that, identify the properties that you want to take a look at, and then we could do the math for you, utilizing what resources that you have, and then figuring out, is it best to take X amount of cash and just do it for the improvements, or take it and put it all down on the purchase. But I lean towards A, doing what's best for you, and B, saving some cash. Always keep some cash reserves. That's my opinion.
I totally agree.
Tim, I'm going to get you hooked up with Cody. You left your number with our producer, so we appreciate it. And you guys, I want to go see that ranch that you got, the Walkout Ranch up there. So definitely get you in the car.
Maybe we'll make Tim a neighbor. Maybe he'll just come
There
to our
you
lake.
go.
I mean, this is how it starts. This is really how it starts. And again, he's making the steps to make that initial conversation. Cody, again, you thought about it and you just expanded on something, and you're amazing. And I don't just say that easy. We've done, and I just told you guys, we've done over 1,100 shows, 25 years of producing the mortgage real estate show. And the things you said about, you want to buy this property, go up north. And again, we talked about it. I got to live here. Everyone who's going up north tomorrow, they're going to call us up and say, I got to get approved for a place. And this guy's thinking about it. But again, sometimes they're sitting vacant. They are vacant. My family has a place in Sarasota. That place sits vacant a lot. And, one day I'm going to try to talk my sister-in-law and say, look, let's just get it. And again, the HOA is pretty reasonable where they can do some short-term rentals. But that's a conversation. There's a lot to talk about.
Absolutely. Absolutely. I think that we all know that buying and selling houses, even though we'd like to not be, it's a very emotional process.
Oh, yeah.
It just is. And so we buy it for a season in our life, and then we're not thinking a lot of times about, oh gosh, we should hold this asset, right? And hold it for we buy assets and we immediately think, what is this going to mean to our kids? What is it going to look like when we pass on the lake house or the duplex or investment properties? What's that going to look like for them? And so I think that when people go into it, they need to have that emotion, love something, but make sure that all of those pieces where, okay, if I'm going to be in an HOA or I'm going to be in a resort community or whatever. And then to piggyback on what you said with cash, I cannot say this enough. Even when we have a cash buyer, I'm always looking to you guys to say, hey, I got it. You got cash, but what can you guys do for a pre-approval in the meantime? Because inevitably we go shopping with our wallet and then we find something that we might like better, right? We might like a more expensive home. Or to your point, I don't believe that you should tie up all of your cash reserves and then be sitting on an asset that that's untouchable with no cash.
Correct.
So that's my one little plug. I want to make sure for anybody that's looking for a secondary property. And I was that person because I think if we grew up in an era, I grew up broke. You thought, I don't buy it till I get cash. And it took a lot of training of my mind to go, no, I need to go get a mortgage, keep my cash, and make sure that I have that asset that's appreciating.
Well, there's a saying, when you invest, use other people's money.
Absolutely.
But again, only if you can afford it. But keep your cash. Cash is king. Love it. Got to have it. And it's for reserve purposes. Emergencies come up. But I would tell you, and again, what works for some people doesn't work for other people. Mm-hmm. So if you feel more comfortable laying your head down on your pillow at night, knowing you have zero debt, then do it. I'm a big advocate of that. I'm probably the worst mortgage guy in the world. I tell people, don't get a mortgage. But I would tell you, if you're investing, use other people's money to invest and keep your own money.
Absolutely.
All right, it's almost the end of the show here. And again, if you want to reach out to us, call us at 1-800-LOW-RATE, the best mortgage banker. We'll set you up with Cody Brown and all the great agents we have always on the show. Knowledge is the key nowadays. And again, getting that confidence behind you is so important. Buying these rental homes, any home. And when you start looking at the lake properties or moving towards up north or more rural areas, you are talking about some different things, septic fields. What's that? What's that? Wells and other things, maintaining a solid home. Here in Southeast Michigan, we talked about the older homes, the sewer lines are an issue. But as we go up north, it's well and septic. And again, you got to know what you're doing. You guys bought one, like you said, more of a distressed property. You knew the crawl space needed some work. You guys could absorb that. And now you're sitting on, like you said, over $250,000 worth of equity. Smart people, and you want to share that knowledge. These agents, I mean, the words just fall out of Cody's mouth. If you're looking to buy a property, again, we'll get you set up with Cody Brown, and even the one caller who called in will get you set up with the right people. We've got sports all day long here on 97.1 The Ticket. Again, Cody, just maybe a couple last words. Just give us something that maybe some of the buyers out there, some advice if they're out there driving around in the 90-degree heat today. Other than sign the first house, buy that house, right?
Buy something with air conditioning, right? That's
that's a for sure.
Well, I mean, I think we were talking about it before. Is the right time to buy a house is when you want to buy a house, whatever your personal reasons are. And so I think the first and foremost, almost 100% of the calls that we get do not haven't talked to a lender. They need to call you guys. They need to find out what can they afford. You don't go shopping without your wallet. So that's the first call that they need to be making.
Great stuff. Cody and Ty Brown, Epic Realty. Again, fantastic. Cody, can't wait to have you back again. Thanks for answering your telephone. That's right. If you want the best agents, definitely
go
call
Tigers, Harvey. Harvey, go get us a win tonight.
I want to get us a win. Nancy's the good
Get
luck
us
charm.
a
We
win.
got this today. All right. Forks up. Torque hit one last night. Get on a roll over there, Spencer. And we got a lot of good things happening here and all around across the great state of Michigan. Okay. Keep it here on 97.1 The Ticket. Pat Caputo, he's coming up with sports. We'll see you next Saturday.